Hello, and thank you for accessing our mini session, Top 5 Ways Reporting Can Boost Compliance and Reduce Fraud in 15 Minutes. This session is part of our Timely Topics education series, which includes education and resources designed to speak to the current business environment. I'm your host, Naomi, and I have a few quick items to review before we get started. So first, everything you see on your screen is movable and resizable using the arrows in the corners. If you have any questions about today's content, click on the Q&A widget that can be found at the bottom of your screen, and we'll be sure to get back to you via email. We also have additional resources and links to support today's session in the resources widget that looks like a folder, so be sure to check that out. And then finally, to help guide us on future topics, we ask that you complete a quick survey at the close of the session. You can find it in the widget that looks like a clipboard. Okay, so now that that is out of the way, I'd like to hand it off to our speaker for today's mini session, Hannah Hood. Hannah?
Thank you, Naomi. Let's first talk about fraud and compliance. When you're tasked with managing fraud and compliance for your company, the first step you initially take is finding and creating the best tools and solutions to accomplish business needs. After this is established, most oftentimes moving forward, it makes sense to maintain the same processes and procedures. More of a, if it's not broken, don't fix it kind of mentality. The only problem with this is that over time, business needs and requirements will eventually start to shift and evolve, then leading to missed opportunities to improve and consistently audit those processes you have in place. This is where reporting comes into play. When it comes to reporting and compliance, you not only want to control spend, but you really need to understand it to have the ability to track and follow those trends over time. Over the years, we have put together a list of relatively simple ways you can use reporting to easily monitor spend, compliance, and trend analysis. So in the next few minutes, we'll walk through a few tips that are easy to implement and can bring immediate value to you and your business, including how to decode duplicate expenses, expose exception violations, stop receipt limit pushers, make sure receipts received are reviewed, and keeping ahead of mileage mania. But before we get into the details, let's spend a few more minutes talking about the value of reporting in relation to compliance. So we know that understanding employee behavior is key to helping control costs. Like we said, by digging into your company's data, you can start understanding those trending behaviors that are creating risks, challenging policies, and overall piling on those costs. By initially having that in mind, you can take a proactive approach to compliance controls. This might consist of additional employee education, monitoring, or even corrective action. Overall, by sharing these insightful reports with you, you can feel more confident in fraud protection processes and have enhanced visibility into those impactful compliance topics. Okay, let's get to work. So let's dive into how you can use reporting to decode duplicate expenses. Now, something as simple as entering an expense twice might not seem like a big compliance item, but even if 10% of employees make this mistake a couple times a year, the charges can really add up. But not all duplicate expense entries are simple mistakes. Depending on what compliance measures you have in place, some of your spend could be potential fraud. So this is what makes consistent monitoring, like this report, so very crucial to your business. For example, let's look at a few scenarios. First, an employee files the same type of expense for the same amount twice in one day. This could be as simple as ordering 2 cups of coffee. So there's nothing to worry about here unless the employee is exceeding any daily limits you have for food or beverage. Another way we can see duplicates comes down to employee impatience. Let's say an employee is anxious to get her expense report filed and doesn't wait for the credit card transaction to feed in, and she files the expense mistakenly as cash. Again, this isn't fraud, but it will likely result in a duplicate charge once that credit card feed imports in. Both of these are important, but not critical. And the report I'll show you in a minute will help you get the insight you need to re-educate employees and get these costs under control. The standard report duplicate expense items has some useful prompts to help you get the most out of the data it provides. 2 big items to note here. You can use the minimum amount prompt to filter out smaller entry amounts. This is useful in limiting the data you're needing to analyze. Secondly, there's an option for highlight payment type mismatch. This is another useful prompt that allows you to check when payment types don't match between 2 separate reports. Using this tip will help you see if an employee has filed a credit card transaction on one expense report and then filed a cash transaction that matches the same transaction date, expense amount, and expense type within a separate report. Now, this tends to happen quite frequently when there is a delay between the e-receipt and the credit card transaction importing into Concur. Thus, the employee mistakenly expenses both, and the system reimburses twice for technically one expense. The third scenario is a variation of number 2 we just talked about, but the intent is different and somewhat troublesome. In this case, an employee is intentionally filing an expense for the same day and using a receipt from a credit card transaction to get a cash reimbursement. To better understand this, let's look at a fictional employee, Dwight Schrute. As you can see, he used his corporate card for a parking expense on November 5th for $10. On the left-hand side, you can see that he submitted an expense report with this credit card transaction, and the report was reviewed and approved. Then on the right-hand side, he submitted another expense report with the same entry information, and this time he indicated that he paid cash for the parking and attached the same receipt. Since the approvers are none the wiser, this expense is reviewed and approved as well. Thus, the employee pockets this cash reimbursement. As you can see, this report is created to find those duplicates by matching on the employee, transaction date, expense type, and expense amount between 2 separate reports. The report also allows you to match more broadly or narrowly depending on what you want to capture. 2 tips to note here. Be sure to enable the payment type mismatch to yes when running the report. This will pick out the line items that are the biggest fraud potential. Also, be sure to analyze the data to see if specific departments or employees are consistently on the report. All right, now let's talk about our second tip, exposing those exception violators. So exceptions are a great way to keep track of what employees are doing or not doing. These are flags in place for them to make them aware or modify expense entries, and if they don't, you can see that as well. So what are some examples of exceptions? A popular exception clients want to have more visibility into are meals. Meals over the limit is a really easy way to see how employees are spending money. Another one is receipt compliance. Receipts not attached is another great way to view into what's happening in your spending. These receipt exceptions typically won't cause a hard stop in the expense report, but they will create an exception that you can further investigate. We all know that attaching receipts is key to reducing fraud, so having some kind of recurring audit in place to dig into these exceptions is extremely important. To locate and run this report, you can follow this pathway. As you can see, you can filter the report off of employees and specific exception codes. This is beneficial as it allows you to hone in on specific exceptions and see the employee spend data in relation to it. This again enables one to find trends and is thought-provoking to what is and is not working for your current audit rules in place. When you run the report and evaluate the data, here's a tip. If you consistently see employees over the meal limit, it may be time to increase that meal limit due to the boost in cost of meals. Also, you can use bursting to get this information out to the people that need it. So instead of creating multiple reports and individually sharing them with different stakeholders, you can slice and dice the data based on different cost centers or departments. For example, if you have 3 controllers in an organization, you can create a specific version of that report for each controller and set it to automatically run on a weekly, monthly, quarterly, or whatever schedule you see fit. Okay, we're moving now. Let's get to point number 3. Stop receipt limit pushers. Every organization has a receipt limit. This means that employees are not required to submit a receipt if their expense is less than whatever the limit is set to. Believe it or not, while that limit is intended to make employees' lives easier, some will use it as an opportunity for fraud. Looking at the expenses near receipt limit report will help you find those possible fraudulent transactions. For example, if you have a $50 receipt limit, ask yourself, is every bill you see for $49.99 a real expense? Typically, we don't see expenses less than a penny to the rounding dollar. Thus, having an expense so close to the receipt limit can be a red flag, and you want to ensure that these are being monitored. So that meal for $49.15, or that taxi for $48.79, or that dry cleaning for $49.99, are those real expenses? That's what this report illustrates. To find this report, you can follow this pathway. As you can see, when you run a report, you have the option to filter by cent per payment date, receipt limit, percent under limit, expense type, and payment type. You'll first want to understand your own company's receipt limits and then input your criteria. Best practice would be to run this data over a larger period of time to paint the clearest picture of employee spend and compliance trends. One crucial tip to consider when running the report is to watch for cash payment types. Fraudulent transactions are typically cash and can be consistent over time. Thus, when analyzing the data, be sure to input an adequate time frame and monitor what payment types are being used. Point 4 really builds on our discussion of receipt compliance, because even if you require the right kind of receipt on a specific transaction, is anyone really looking at them? That's where receipts received but not reviewed steps in. Managers are your first line of defense, and that's a vital role in your quest to control compliance, protect budgets, and use your business's resources wisely. But over time, we found that too many managers become lax when it comes to simple checks and balances and lose sight of overall fraud potential. This can become very hazardous over time. Prospectively, even if an expense report does pass manager approval and hits your processing team, many of those audit teams are only looking at a small portion of the expense report population, sometimes as little as 10%. But thankfully, with Cognos technology and this report, one can still use the data as a driving point for future monitoring and compliance. Once you run the report, there's a couple of tips you should keep in mind. The main one being is ensuring to first summarize and sort by individual. This allows you to see the top violators and use it as a source of re-education to managers. Second is to monitor manager compliance over time, as this would be a beneficial report to also set up on a burst or reoccurring schedule. As we mentioned earlier, the simple act of doing this analysis and communicating with managers can make a huge difference over time. When you show managers and approvers that you're consistently paying attention to these compliance items, behavior tends to change. Our last point is about mileage, and anyone that's managed spending knows mileage is one of the trickiest spending categories to get your arms around. Now, why is mileage so messy? A couple points here. Mainly, it relies on a lot of trust in your drivers and employees. Secondly, it's incredibly hard to track and assess. And lastly, it's an expense that doesn't and won't have a receipt. So essentially, you're working off the honor system, and some employees will take advantage of that. But if you know the standard amount of your employees' travel, then you can find a threshold and review anything above that. This data can also be used to review if the use of fleet cars would be a cost savings over time. That's where the report excessive personal car mileage comes into play, and it can be found through the following pathway. There are a couple things to note when running the report, the main one being the break-even distance in the prompt page. This allows you to filter on a specific mileage threshold. Now, if you're wanting to see all mileage, you want to input 0 in this threshold. Also, if you're only wanting to see mileage for a specific region or country, be sure to select currency. After running the report, you can see it provides you with the essential employee and entry information. Now, we already talked about modifying that break-even distance, but another item to note is the transaction date. To paint the best picture of personal car mileage, you'll want to run this report over a larger time frame. This will allow you to find trends and be a pivotal data point when teetering on the thought of purchasing fleet vehicles or not. As we wrap up, remember these 5 crucial reports have evolved from hundreds of client conversations over time. They're simple reports to run and will enable effective compliance and fraud management processes long-term, while also keeping users and businesses protected. I thank you for your time, and I hope you found this presentation both informational and thought-provoking.
Thank you so much, Hannah. If you'd like to check out additional resources available within the Timely Topics Education Series, you can click through the link that can be found in the Resources widget. And as a final reminder, please be sure to complete the survey before you go. Thank you so much for joining us.